Everything you've ever heard about retirement says one thing loud and clear. If you don't have a big pile of money stashed in a retirement plan, you're not ready to retire. But what if that's wrong? What if, under the right circumstances, it's actually okay to retire with little or no savings? Before you click away, let me be clear. I'm not saying retirement planning doesn't matter. It absolutely does. And I'm definitely not saying you should be reckless with money. What I am saying is that retirement success isn't all about the amount of money you have put away in a retirement plan. It's really about how people are able to manage their finances, their income, their expenses, and their safety nets in a way that's properly aligned. I'm taking this seemingly ridiculous topic on because I know people who have no money at all and even really limited incomes. And somehow they manage to retire, at least superficially, it seems comfortably. Maybe they live different lives, or maybe they have a few advantages that the rest of us don't. But somehow they make it work, and I think that needs to be discussed, especially since there's so many people in America statistically who don't have anywhere near $1 million, and some of them don't have anywhere near $100,000. But those same people are retiring, and some of them are retiring fairly comfortably. In this video, I'm going to walk through 5 specific situations where it's actually okay to retire broke. And just as importantly, who this absolutely does not apply to, because that's the majority of people. A slim number of people fit into this category. Because for some people, waiting to hit some magic savings number means working years longer than necessary. Maybe they never retire at all. While for others, retiring without a plan can be a financial disaster. What's the difference between the two? So before you assume that retiring broke is impossible or irresponsible, watch this first. To start, let me explain what I mean by being broke. I think that's really important. I'm not talking about somebody who's penniless, but about someone with resources. Those resources might be coming from a different direction than they do for the average person. It also might not mean that a person doesn't have any savings at all. They may have a decent amount of emergency savings or non-retirement savings. But one thing that they don't have is a big fat retirement plan. And that's kind of what I'm zeroing in on here. The person who doesn't have that plan, but maybe has a few $1,000s salted away in an emergency fund. I think we need to talk about how they're able to make this happen. And I don't claim to know how they all do it, but I think there are some things that I've learned over the years from working in personal finance as to what the keys are for people who don't have a lot of money but still retire. With that in mind, let's get into the 5 times when it's okay to retire broke. Number 1, when you have stable income that covers your needs. Talking here about Social Security, pensions, annuities. I know a lot of people don't have annuities, and not as many have pensions as in the past, but you need some sort of stable income. And that income has got to cover your basic living expenses before you need to dip into savings at all, because you won't have much, or maybe take on an earned income source. The truth is, predictable income beats a big savings balance. Let me give you an example. Let's say you have no savings, but you have $20,000 a year in Social Security. Using the 4% safe withdrawal rate, $20,000 in Social Security income is the equivalent of having $500,000 in savings. For example, if you needed to generate $20,000 in retirement income from your portfolio, you'd need a portfolio of $500,000. $20,000 is 4% of $500,000. If you're getting $30,000 a year in Social Security, that's the equivalent of $750,000 in retirement savings. So maybe that's one of the big keys to why it is possible to retire broke. Obviously, the higher your fixed income is, your retirement income, especially if you have pensions, the bigger that number is. If you have $50,000 in retirement income from a pension and Social Security, that's the equivalent of having $1.25 million in retirement savings. So it's not as necessary for somebody in that situation. And then finally, the key question is that income stable and reliable for the rest of your life? If it's not, it's kind of a fantasy to retire on it. Let's say you have an annuity and you're retiring on that, but it's going to expire in 10 years. That's just waiting for the bubble to burst. Not a good idea. Number two, when you have passive income. This one's kind of complicated. Most people don't, but it is possible. One example is rental real estate, where you're collecting the profits on a property that you own. I've actually known many people over the years who have this kind of income. It's not quite as passive as a lot of people think, because you do have to rent out the place, which takes time. You have to clean it up after the tenants leave, perform any necessary maintenance, and sometimes you have to write some big checks to pay for repairs and replacements on the property. So not 100% passive, but I'm really not sure anything is other than money sitting in the bank earning interest. Here's another example. I've seen this happen. You're self-employed and you sell part of your business to a partner. And in effect, that person runs the business and you become a silent partner, but you split the profits. So let's say the business generates a $100,000 profit. The working partner collects $60,000 per year to run it, and you get $40,000, which is almost like a dividend. That is possible to do if you have an established business. Maybe you have one of those online businesses that generates income while you sleep. There's so much talk about that on the web. I think it is possible to do. I have generated passive income sources from the web. So yes, it's possible. You have to get it going, and it does require a lot of skill to get that up and running. But once you do, it can be money in the bank while you're sleeping. Although just keep in mind, it's not permanent. A lot of products that you might sell, especially digital, may have a run for a couple of years and then they peter out. But that is one thing to do. And you could become a serial online business owner where you just go from one business to another. It is possible, but the average person's not going to do it. Number three, this one is really important. It's when your living expenses are really low, right? For example, you own your home free and clear. I think that probably would be almost a necessary situation. You have no other debt, no car loans, no student loans, no credit cards, no installment loans, nothing. You live in a cash and carry world. That alone is going to make everything else possible. You live a modest lifestyle by choice. And we all know people like this. They could live on $20,000 or $30,000 a year. And no, they're not living in the lap of luxury, and they're not going out to dinner. They're not taking vacations or driving a late model car, but somehow they're okay. It's because, they don't have the great expectations of having so much. What is this saying? That the richest person isn't the one who has the most, but the one who needs the least. And this is people who live low fit that category. Another thing is if you can take advantage of geographic arbitrage. Some places are less expensive than others. That could mean downsizing or relocating to a less expensive area. If you have that flexibility, not everyone does. You have health insurance with low out-of-pocket requirements. I'm talking here like traditional Medicare, especially Plan G, which is the one my wife and I have. The maximum out-of-pocket is $283. There are other traditional Medicare plans, and there are Medicare Advantage plans where the out-of-pocket is in the thousands of dollars. And remember, that's per person every year. So yeah, you're going to need a lot of savings if you have that kind of a plan. You're better off taking the higher premium, lower out-of-pocket plan if you don't have much money. In a way, that's kind of a forced savings for medical expenses when you take the high premium, low deductible. Number four, when you plan to keep on working by choice, and some people do. One thing I learned when I was working in public accounting, because we worked almost entirely with self-employed people. Self-employed people rarely retire. It's because for a self-employed person, retiring is sort of like quitting on yourself, and you don't want to do that. Plus, the business is part of your life. I mean, there's some people, they're sick of it, they want to pitch it in, and they want to move on. I get that. But for the majority that I've seen, they never want to give up. Some of them, seeing them work into their 70s is common, and some of them would work into their 80s. The other possibility is you work part-time, or you do consulting or freelance or seasonal work. A lot of people do that. Some people say, well, you're not really retired if you have to do that. I disagree. I think that retirement really, especially today, is more about living light, about living easy, than it is about just dropping out to do absolutely nothing. I would be bored to death doing absolutely nothing. And I don't know how people do it. Maybe you could fill the hours with, playing golf, volunteering, whatever. But I think a lot of that gets old. Work does give you a sense of purpose, regimentation, etc. And if you don't have a lot of savings, I think it's almost a requirement. You're going to have to do this. You're self-employed, and rather than selling the business and moving on, instead you downshift, you work part-time. Maybe a soft version of getting a managing partner. You shift the workload over to other people, and you take it easy. You just kind of keep an eye on things, but you're no longer, manning the counter or whatever the case may be. You're in the back, you're managing, make sure everything works out, everything's flowing, and you're still drawing an income, but you're not working 40 or 50 or 60 hours per week. Just remember that flexible income, which is what earned income generates, means that you need a smaller savings balance. Same thing with pensions. What I said about the 4% rule. If you can make $30,000 a year from working in some capacity, that's the equivalent of $750,000 in retirement savings. Covers a lot of ground. Number 5, when you have a younger spouse who's still working full time. Let's say you're 65 years old, you're ready to retire, but your spouse is 52 years old and plans to work for another 10 years. In that situation, you'll have less need for savings because you'll be able to rely on the spouse's full-time job. The continuation of at least one full-time income may also enable you to accumulate savings after you retire and before your spouse retires. I'm certainly not saying that this arrangement is what most of us would consider to be fair. I don't like the whole idea, but one spouse retiring while the other one goes to work every day just seems inherently unbalanced. I don't like the idea, but some people are in that situation. I've seen it and I know it can work. I'm certainly not saying that this arrangement is what most of us would consider to be fair. And I realize this is really kind of a difficult one. The whole idea of one spouse retiring, anyway, not going to beat that to death. Like me, you're probably aware of other people in this situation. The fact that there is a younger spouse working full-time actually is an advantage on a number of fronts. It's not just the extra income replacing savings. There also could be benefits, maybe health benefits, even for the retired spouse, paid vacation time, whatever the case may be, all kinds of perks with that. Health savings account is a big one. So there are a lot of benefits that could come with that. That does not apply to most people. And again, I don't think it's really fair, but it does happen in the real world. Now, before I wrap up, I want to reiterate some important caveats. I'm certainly not advocating that everyone or even most people retire broke. Only that it is possible in certain situations, and maybe those apply to you. I also feel that even though I'm using the word broke very loosely, that doesn't mean that you shouldn't at least have an emergency fund or some kind of non-retirement savings. Everyone, whether retired or working, needs emergency savings because emergencies happen and they can be budget busters, and that's whether you're working or you're retired. If you're retired broke, it's more important than ever that you have strategies to deal with inflation. This is huge for anybody discussing retirement. If they're not talking about inflation, they're not talking about retirement. Whether we like it or not, inflation is part of the economic system of our time. It's not going away. It's part of policy. So when you hear things like, well, the Federal Reserve's raising interest rates or tightening the money supply to fight inflation, they're not planning to bring inflation down to zero or to make it go negative. They want it to be above zero, and it's always going to be there, whether it's 2%, 5%, 10%. You've got to have a plan for that. You should also have some sort of a backup plan no matter what, just in case one of the advantages we listed above should fall apart. Finally, retiring broke is not for the following people: those who have no stable income in retirement or inadequate stable income. Anyone with high fixed expenses. If you've got a big house payment, a big car payment, you're still making student loan payments, whether for yourself or for one of your children, I don't think you can do this. Those in poor health with no coverage or very limited health insurance coverage. And those not willing to adjust their lifestyles to living on bare bones budgets or accepting an alternative housing arrangement should that be necessary. Retiring broke isn't about being careless. It's about alignment. That is, aligning your living expenses to fit comfortably within whatever your financial resources are. So what do you think? Do you think it's possible to retire broke? Leave your comments below and let's chat about it. I may even use your comment as the basis of a future video. If you like the video you're watching, hit the like button below and subscribe to the channel. And thank you for watching.